Hey, good afternoon, everyone. It is 1:23. The market's just closed here. Let's take a look at where we closed. I know lots and lots of volatility, lots of uncertainty, and the more people you read, the more uncertainty you're going to feel. And so the best thing to do is just sit back, let price action guide us, and we'll go from there. All right. We're going to look at corn here first. This is three screens on corn, right? Your daily, your 240 minute, and your 60 minute. If you remember earlier in the week, on Monday's close was way down here. We thought this looked like an acute risk reward, and boom, the market just shot up out of there like crazy. So obviously traders viewed that the same way. So now we have another little setup, and I think it'll be interesting to see how they view this. You know, this move down here on the 4-hour chart, which looks like this on the 1-hour, it's contained within parallel lines, which tells us that it's corrective, that it's not a new impulsive structure down, because that's what people are worried about, right? We came up, now, hey, why wouldn't we just come right back down? It just happened, right? So the most recent event, clearly corn just wants to go up and then down and then just all around and punish people. Well, it could. That's always a possibility. But let's be a little bit more objective than that and say, hey, where do the odds really favor? Well, with this move here contained within parallel lines, still holding both the 4-hour and the 1-hour and the daily clouds, you have you're down in an A wave, or this is the totality of this wave 4. Okay, so what could happen here is we could just come in here Sunday night and just blow higher, and come all the way up to new highs and start what we would view as potentially the last leg of wave 1. And so what could happen is we blow up out of here, right? So if we blow up out of here, we come up, then we could come down and get a wave 2, which would be a blue 2, and that would reset all of these. Then we could go higher depending on what happens with weather, depending on what happens in Russia, depending on what happens with oil. So don't assume that the market has to just go up and come straight back down. It does not have to. Another wave count or possibility is that this is just wave A. This is what the 1-hour is calling for, which would be followed with a wave B, and then a wave C, which would come a little bit lower below this low here, and then that would complete this 4 and move higher. So that's a possibility too. A third possibility is that, nope, that's the peak, we're done, and we're just going to turn around and we're going to come lower. I think that's the least likely, but it's at least worth talking about and understanding, hey, that could happen. Where do we know if that's what the case is? Well, it's all the way back down here at $5. It's the bottom of this too. You have to give it that much room in order to stay in the move if you want it to go higher, because this thing can come up and then all the way down to that level and still maintain that bullish stance. So the odds favor higher prices, not lower. What's fundamentally going to drive that? Well, I know the weather could turn more bearish, right? We could start raining. But the current forecast isn't for that the next 10 days. So the weather's hot and dry. We have weather issues in China. You have a known supply situation out of South America, and we have supply disruption and transportation disruption out of the Ukraine, and we have bullish energy markets. So if you look at the totality of that, you have to assume that that's a little bit more bullish than bearish. At least I do, right? Oil's bullish. That's energy demand. You have cattle that are strong. You have supply disruptions all over the world, and you have questionable weather here. That's a lot of bullish fodder for this market to chew on, and I wouldn't be a bit surprised to see us come in Sunday night and just be up and out. Doesn't have to happen. You know, on the flip side, if you're still a demand bear thinking, oh my gosh, we're killing demand because interest rates are too high and because we're going to oversupply it, then if it starts raining, then you may think, hey, we're done, we're going to go lower. One of those two is ultimately going to be right. I think we're in the bull camp for right now because that's what this technical setup is calling for, and it's also very very compelling from an economic standpoint too. So you've got fundamentals and technicals lining up to the bull side, and if you want to make a bearish argument, you're a little bit more skewed. It's a little bit more dicey in our opinion. All right, that's corn. One more thing on corn here. Let me jump back to this. I want to show you the weekly chart. All right, this is our weekly chart that we showed you the other day. Remember, last week we said, hey, these are big signals here, right? You have a piercing pattern. You have this signal. That's a buy signal. Then you have this one, which is a bullish engulfing. That's a buy signal. Now this week we actually completed a third weekly buy signal on December corn. And what that formation is called is 3 white soldiers, okay? So now it didn't win it by much right here, but it did. It did enough to qualify for 3 white soldiers, which is a bottoming pattern. So we have a wave 4 position. We have proportionality across all of our time frames. And that signal that we were talking about on Monday is the same signal that we have today, but it's followed by even a new one, which is a significant one on the weekly chart. So we're looking higher in corn, and I think we just got to give it lots of room and be patient. Okay, soybeans. Where are we on soybeans? Well, there's some conflicting signals here on soybeans. Number one, this is a great close. It held 1402 today. That's bullish. That's fantastic. I think that was the first weekly close. No, there's one right here. So it's only the second weekly close since December of 22, or the first weekly close of 23 above 14. Only the second time since December of 22. And before that, it was June of 22 that we closed above $14. So not an insignificant number. That's why we chopped around here for a couple days trying to see who could win that game. The bulls carried it, and so we're looking up here in beans. Let me show you what the bearish side is, though. Okay, there's a few of them here. So beans are a little bit tricky, and we could need to reset here just a little bit or come down and finish some corrections, because what I don't like about beans are all of our oscillators are diverging. Okay, so we have a bearish divergence on the MACD histogram. We have bearish divergence on the force index. We have bearish divergence on the RSI, and we have bearish divergence on the stochastics. All of those are divergent. Yes, that is a significant signal, and one that could very well accelerate this move to the downside. So we're not ignoring that signal, not at all, but we're going to choose not to follow it. And the reason is that corn just posted its weekly reversals, and we have this blue 3 right up here. So the blue 3 trumps any of these signals, because what could happen is the acceleration here could be very very dynamic if we do come up out of here Sunday night. I think we'll know that really quickly. I think there's very limited risk on it, like down to 1385, which is today's low. I think anything above that should be viewed as wave 3 and bullish. Anything below that is a correction to work off these bearish divergences, and then I think we turn around and take it higher again. So everything about this I really like from a technical standpoint. I just don't love these divergences. And again, here's the problem with these divergences, is that they haven't yet confirmed. To confirm, you have to have some sort of a topping signal, right? You have to have a reversal, double close reversal. You have to have something up here that would say, hey, we are going lower. And I don't see that on here, even though I certainly understand the argument that somebody might look at that. So beans could get dicey, but on the other hand, that 3 is compelling enough for us to want to look higher. Okay, wheat. Let's look at December wheat. I know a lot of you are nervous about wheat. Could go lower, kind of like corn, right? There's a lot of macro events that could go either way, and it's unpredictable. From a technical standpoint, I'm bullish. I think wheat looks really, really fantastic for a couple of reasons. One, you go back to this trading range all the way back to December, right? And what you see here are lower lows, but what you see from May forward are just a bunch of higher lows. but the highs up here keep getting just a little bit higher. So you have higher highs, you have higher lows, even though we're in a tight range-bound situation. And I know we're at the top end of it, and I know that we're getting banged around and whipsawed a little bit. But this is actually pretty bullish. We've closed above in the top end of this range now for 3 days in a row. We tried to break it today. We couldn't do it. We brought it right back up, closed near the top, and everything about this is telling us that we should move on higher. And then look at this little signal right here too, right? This is a wave 3, which tells us that we should be up and gone very, very quickly if that is indeed a wave 3. So we won't give it too many days to get up and out of here, but we're at least going to give it next week. And it would take a trade all the way back down to this 836 number before we got nervous about that trade. And honestly, until we take out the bottom of this cloud, I'm not really going to be too bared up on wheat. But there's no way to guess or predict which way we may go, right? There's just no way to predict what's going to happen in the geopolitical situation. So if you're worried about cash wheat, sell it, re-own it. Especially if we break out of these highs, right? Above 8.89, above $9, you got to own wheat because it could easily expand up higher with this wave count. So we're not bearish wheat, we're not bearish corn, we're not bearish beans, even though we're a little bit uncertain on beans just because of the divergences. But hey, if we don't get wetter forecasts, then they're going higher because they don't have any room for error. All right, now with that, a couple of housekeeping things. Jeff and I will both be out of the office all week next week, so we won't have video updates. Phil and Andrea will be here, so if you need something, reach out to them. Phil will do his daily commentary every day, and he has and we have written trading plans and instructions. We'll be talking to them every day, and we'll be watching the markets while we're gone. And we'll be talking to them every day about any adjustments or anything that needs to be updated because of news flow or anything else. So if you have trouble getting a hold of me or Jeff next week, it's because we're out. We'll get you called back as quickly as we can. But otherwise, reach out to Phil or Andrea, and they'll make sure and get a note to us. Hope you guys have a great week. Remember, there is risk trading futures and options, and you should only do so in light of your own financial condition. Hope you guys have a great night. We'll talk to you soon. Thanks. Bye-bye.